financial crisis recovery.
Foreclosure, short sales, bankruptcy, credit card debt, job loss, depreciating home values, money management. Peace of mind when it comes to your finances seems completely out of reach under current conditions, but there is a way to achieve it. For the next 60 minutes, you're going to find out how to cover your assets. Cover your assets.
And if we see that trend, we've been tracking it for how long, we see that trend, we're not going to make that loan because there's a 30% chance that they go into default.
The lenders are wise to this stuff. And you have to understand, the financial institutions absolutely detest credit repair beyond imagination. Let's get real. For all the years that we've also heard that credit repair doesn't work and there's nothing that a credit repair company can do for you that you can't do for yourself better, that's probably not true. There are credit repair companies who are extraordinary at doing it. We help people with it, and I know probably we can help a person more than they can do it on their own, in fact, without a doubt. That being said, doesn't matter, because if the lenders believe that this is a manipulation of score, or most certainly if they pull your credit and they see that items are in dispute, in this instance with this particular investor, meaning the one that Mike just described, they're not going to give you a loan just because of that particular situation. So that reinforces the point that it isn't just about putting a Band-Aid on something in credit repair. It's about fundamentally changing the way you manage money to ensure that when you do rebuild your credit, it stays there and it continues to grow and build. Credit repair is something that absolutely can be done. Having said that, credit education and money management proves long-term to be more successful, which leads us into the point that I came away from the break with, Mike, which is how to position yourself for future financing and how much house can I afford. You go see a real estate agent. They're in the business of selling real estate. And one of the points that it has to really be made here in a very strong way is that the individual practitioners who are in these different businesses like mortgage, like financial planning, like insurance and real estate, they have to make a living. So anything that I'm about to say here is not to begrudge anybody in the industry. It is about the individual consumer taking onus of their own situation. But remember, when a real estate agent sends you to a mortgage broker to qualify you, the main premise behind that is they don't want to have you driving around with them, spending 2 weeks looking for homes endlessly to find out in the end that you couldn't qualify to finance a doghouse. They want to know before they take you out that you are a legitimate candidate to write a purchase agreement and close on that home. Otherwise, they're wasting their time. Having said that, when they send you to their mortgage broker partner, that person's job is to get a loan done and to disseminate whether or not that person can really qualify for financing and at what level. However, that doesn't have anything to do with how much house you should really be buying. So what happens often is that the real estate agent, finds you, maybe you're stumbling around in a spec home or a model or some open house. A real estate agent talks to you and you tell them about how you'd like to buy a house. They send you to their mortgage partner who qualifies you for financing at a particular level. You go and find a home, write a purchase agreement, close on that thing, and the first month you get that mortgage statement, that coupon book in the mail, you shudder because it's probably the first time you realize how much this payment's really going to be. Now you realize you got things like window treatments and lawnmowers and weed whackers, and oh my God, in the first month you already realize you took on more of a payment than you can legitimately afford. Happens all the time. Mike, you were talking about people who come in, you see them, and you know that this is almost inevitable and imminent. It's going to happen.
Yeah, there's certain clients where, and I even told the real estate agent this, I said, look, I can get them qualified, I can get them the loan. I know there's other income because it was a couple where one had the credit, one didn't. So I knew there was some other income that was still going to be thrown into the pot that would help a little bit. But I told the real estate agent, I said, look, if I had to take a guess, I think this person's going to be in default in 12 months.
Wow.
And it's not my job to tell them that they can't afford it. It's kind of my job to say, this is what you can qualify for, but this is what I recommend.
Yeah, man, they're adults. They're adults.
And then they got to make their own decision. And a lot of people, when they come to me to get qualified, is I don't ask, well, how much do you want to get approved for? I ask them, how much do you want your monthly payment to be? And then you tell me what you want your monthly payment to be, what you're comfortable with, and then I'll tell you what purchase price of a house that you can go out and buy that will keep that payment or give you that payment, because anything over that, you're obviously not going to be comfortable with it.
Mike, you are singing my song. That's exactly what I want to hear you say. Now, with that, so just to reiterate what Mike has just said, He says he doesn't tell you how much you can qualify for. What he'd like for you to be able to do is to come in and say, I can afford principal, interest, taxes, and insurance, maybe association dues, all things considered. I can afford a mortgage payment of this level, $1,500, $1,950, whatever it is. He wants you to know that, and then he tells you, based on your credit and financing and all the other things that are out there and spinning, meaning that they're ever changing. He says you should be looking at a house in the $230,000 range or the $170,000 range, because if you want your payment based on your situation to be this number, this is what you ought to be looking at, as compared with somebody who says you can qualify for $350,000 with your $50,000 per year income, right?
Right.
It's a pretty big deal. Now, let me submit to you what I see as the problem in that. I've been in financial planning for 28 years, and I do budgets for certified financial planners and for CPAs and people who, frankly, are no better at managing their money than the average consumer. And it isn't because they're not smart enough, because people will delude themselves into anything they want to hear. And here's my submission. I don't think most people have the tools, frankly, to know what they really can afford. They just want to manipulate the numbers to get what they want to get. That's what it is. All right. So if I sit down with a person and you were to tell one of your family or friends, you're going to meet with some guy who's going to charge you $250 an hour to create a comprehensive budget to determine how much you can actually afford in a home before you go see a mortgage broker, I suspect that everybody that you know would think that was the most absurd thing they had ever heard. And why in God's name would you ever do that? Because nobody else you know has ever done it. Yeah, well, I know millions of people are in foreclosure right now, too. You know? So, Mike, the way that I go about that is I sit down with a person, I leave the house payment out. I ask them the square footage. I ask them if they're looking for a newer home or an older home, because that has much to do with the utility costs. I know where, if we're going to have XL Energy or we're going to have Wright Hennepin or who we're going to have. I go through the square footage, some reasonable assessment of what they're going to have as utility bills. I find out what they're going to have as driving proximity as compared with where they are now, the cost of the car insurance that might go up, and all of these other factors. And then they tell me about their lifestyle. Hey, man, they're a young couple, they're in love, and they're going to take 4 vacations per year because they're going to nurture their lovely relationship. Do I sound cynical? I've been married for 25 plus years. Anyway.
So you're not taking 4 vacations a year?
Yeah, I'm not taking
anymore.
4 vacations per year.
Okay.
And they got date night in there every night of the week, and, on and on and on, And you get done, and you leave the house payment out, and you leave in a reasonable amount for emergency funding, because, when you're a landlord or when you're a renter or a tenant, water heater goes out, you pick up the phone and you bitch to somebody to come and fix it, right? But when it's your stuff, you've got to pay to do it. And all that stuff has to be built in. And frankly, most people who are leasing and renting aren't prepared for it and don't know that. You build all that in, and here you've got a couple who are each making $45,000 a year, a $90,000 per year gross income, and you get to the bottom of the page and they got $950 a month left over to dedicate towards a house payment. And they say that's absurd because I've already been to see a mortgage broker who told me I qualify for $2,500 or $3,000 a year, a month rather. And I say, well, great. I'm not insinuating you can't do that. What are you willing to give up in your life? Well, I don't want to give up anything. As a matter of fact, we want our life to get better. And I say, well, look, the information is correct. You squeeze back the things that you want to squeeze back to make that money available, and then you go see a guy like Mike with a payment that's $1,800 or whatever it is, and now you know specifically what you're going to give up in your life to be able to do this, and now you realize whether or not you really want to buy a house at this level, not because of what you qualify for, but because you're prepared. That almost never happens, does it, Mike?
Yeah, no.
It almost never
happens.
Yeah.
And it's especially first-time home buyers, they don't realize it's, the lawnmower, the weed whacker, like you said. It's all this other stuff that can come up that, you got to figure out a way to make it work. And if you're not budgeting for that, if you're not prepared for that, it's a blow. It's a blow to take. And, some people have parents they can go to for help and this and that. But a lot of people, they're on their own and they need to be able to make it work.
Number one mistake new home buyers make is they compare their rent to a mortgage payment, assuming that it's going to be essentially the same thing. absolute nonsense. You know, they come from an urban setting, maybe a condo, a townhouse. Now they've gotten married. They want to maybe have kids, move out to the suburbs, and they drive into these neighborhoods, and the lawns are pristine, and there's gardens, and it just looks so beautiful. They write a purchase on that home, and within 3 months, their lawn looks like a freaking jungle because they had no idea the amount of money that went into doing this, much less budgeting it into their finances. Yeah. And they just have no clue. And so when you put that stuff together and you actually show them in black and white and high degree of detail, now for the first time they fully appreciate what it's going to take to have that house and to long-term make those payments so that they don't become one of the casualties in the real estate market.
Right. You know, heating bills, air conditioning bills, you get a couple really cold months in Minnesota. I mean, you're talking what can you expect for a heating bill?
$200 to $300 a month just for the natural gas bill.
Exactly.
You know that 70% of the bankruptcies in America could be averted if people had an additional $200 per month in cash flow in their monthly budgets. You know that in Minnesota, the difference between the peak months in the winter in utility bills are more than that, and that alone could be enough to throw a person into a financially challenged position and begin to have $30 charges at the bank. The next thing you know, it's spinning out of control, and now they're using their credit to subsidize their lifestyle. Pretty soon they got $30,000-$40,000 in credit, and the only thing left to look at is bankruptcy. I see it all day, every day, and it is depressing. So, you know, as you said already, Mike, there's utilities. Hey, man, look, you're renting a loft condo at $1,800 a month, and you assume that means you can make a payment of $1,800 a month. Yeah, really? You have no natural gas. Your electricity's $20 a month. Hey, you have your cable TV and your internet built into your $1,800 per month. You have no water, you have no sewer, you have no garbage. You start putting all of those things in, and you'll find out that immediately you go from $1,800 a month to instead about $1,200 or $1,100 a month, and you had no idea that you should have been looking at it that comprehensively. This is something that people need to do, and then they go and work with a professional, and they say, I can afford this amount of house. They are now an educated buyer, and you help them get the financing, the best rate that they can, and then they are assured that they're not going to be in a compromised position. This is almost never how it's done, but it's how it should be done. Do you agree with that, Mike?
I agree.
All right. Well, listen, we're going to take our break. We're going to come back. We're going to talk about underwriting guidelines. Once we've got that established, how much house can I afford? How much house should I be looking at? Now we want to talk about the challenges that you're going to undergo in terms of getting and qualifying for that financing. Credit, underwriting, all of it. Come on back with us. This is Cover Your Assets. If you have any questions, feel free to call in 651-646-8255, 651-646-8255. Looking forward to hearing from you, answering your questions. This is Cover Your Assets. We'll be right back. If you or anyone you know are in a financially challenged situation, listen. My name is Todd Rooker. For over 20 years, I've been helping people strategically plan for and deal with a financial crisis. My typical client may have previously had a substantial net worth and are now in fear of losing their personal home. My clients will often say, in the past, I was financially successful. However, at this point, I'm exhausting all of my financial resources trying to make my payments on time. I feel as though I'm simply delaying the inevitable by throwing good money after bad. So my questions are, Todd, do I just let the bank liquidate my business? Do I need to consider things like foreclosure, short sale, deed in lieu, loan modification, credit counseling, or even bankruptcy? And then most importantly, how do I minimize the damage and rebuild my life when this disaster is over? This is my world, and I teach classes on those very topics.